Okay, folks, welcome to Market Wrap for the 8th of November. So what we're going to do first is we're going to go over the major averages. We'll talk a little bit about the trades that we have on. And then we're going to segue over into the closing price action of the major averages. And then with members, we're going to segue over into the strategy session. So members, if you're looking for the full-length version of Market Wrap, head on over to the website. It's posted there. If you're not currently a member, sign up for the 14-day free trial offer and get immediate access to our members area. Okay, trade number one that we have on at current is an options trade of PayPal, an earnings trade. They reported earnings after hours. They beat on EPS, missed on revenues, and guidance was a little bit weak. Now, you're not seeing much in terms of price action after hours, which is great for us. Perfect. Why do we like that? It's because we didn't buy the options, we sold the options. So we don't want any volatility. We want it to be as near as unchanged to where it closed as possible because we want those options to decline in value. And we sold, very briefly, we sold the 265 call contracts expiring on the 19th. Simultaneously, we sold the $205 puts, also expiring on the 19th. We were paid a credit on very expensive options because speculators bid the value of the options up due to earnings, and tomorrow morning, you're going to get what you call IV crush, implied volatility crush, meaning the value of those options are going to deflate in value dramatically absent a major move in the share price. So as you can see, we are very far out of the money on these strikes. So we're looking pretty good into the open tomorrow. And we'll probably just put in an advanced order, have the computer take us out at a profit. At a bare minimum on this trade, bare minimum, we're looking at 60% profit on the premium. Obviously not the stock, but the premium. So members who joined in, good trade. Let's talk a little bit about Tesla. Tesla, I had mentioned on Thursday night, I had expected a major decline on within the next 5 trading days. We got the decline. I think I said 10% that night. I was probably being hyperbolic. But we certainly pulled back since Thursday night by at least 6%. So we gapped down today. We cleared off our options trade. We were long of the options, meaning we were betting that Tesla would decline in value. A buddy of mine reached out to me today, said, did you make a killing on that trade? I wish I could have said yes. I didn't because I put a hedge on Friday, which really capped our gains because the time decay on the options is really starting to kick in. That's why I don't like to buy options. I hate time decay. So it worked our way. We were right on the call. So we'll take it. We'll move on. In fact, we began shorting NVIDIA today. Let's talk a little bit about that. Now, the reason why we began shorting NVIDIA is the same reason why we began shorting Tesla. RSI is at nosebleed levels at 89.17. When we first started shorting Tesla, you had RSI at around the same mark. Now, what I did do wrong here, and I won't repeat that mistake again, is that initially when I bought the put contracts on Tesla, I also hedged the trade at the same time, selling a put option, so that helped finance the trade. While we made money on selling that put option, I could have made more, and that was a mistake because the shares kept going up. Tesla was a real stubborn short, but ultimately it broke, and we are now moving on to NVIDIA. And these are what I call, folks, unsustainable trades, meaning these trajectories are unsustainable. Does it mean that NVIDIA can't go up tomorrow? Sure. I go into all of these trades expecting NVIDIA or Tesla to go up higher. We nibble, nibble, nibble. We go in and we add in increments. So we bought put options, deep in the money put options, but we also sold a put option to help finance the trade, and we'll keep doing that until ultimately NVIDIA breaks. Members will talk more about this trade in a moment. Let's now move on to the bond market. And the bond yield bounced today. Bullish key reversal bar, held support. You remember last Friday was a dismal day for bond yields. And I stated to members, I said I was very, very surprised to see with the strong jobs report, weakness in bond yields. So it was no great shock to see bond yields pop back up higher today. Now looking at the 20-year bond ETF, the TLT, an inside day, a down day, no new high, no new low. Light volume. Stokes is still rising. So this is still a bullish setup here, but I'll tell you, it's like yields and bond prices are in a death match right now. Very odd. A lot of volatility here. So what we really want to do is we want to watch for a breakout above this upper band in blue. That would be a significant macro breakout, or a breakdown below this lower band in blue. Until that time, right now, we're in a trading range. The tips, daily chart, new all-time highs today. We didn't close there. We closed just shy of it, but new all-time highs today on the tip market. Volume dipped a little bit. The dollar daily chart pulled back on the day. We broke support a few days ago, and this is what's really allowed for gold to begin to move up higher. So we had a bearish key reversal bar on Friday, a breakdown below the lower band of support. The dollar's in trouble. The VIX daily chart. So going into the new trading week, we expected some volatility because I went over this with members that the weekly chart of the VIX, we had two back-to-back up weeks on the VIX, but yet you had the S&P 500 moving up higher as well. That is not a bullish sign for the S&P 500 because somebody out there was hedging their long bets or taking a net short position against the S&P 500 using VIX contracts. So this week, we have popped our nose above resistance. Will it close there? Way too early in the week to make that call. Back to the daily chart. But the indicators are looking very good. RSI rising, Stokes rising. A bit of a doji star formation on the day, W formation on the price action. It looks pretty bullish to me, folks. Therefore, bearish for the S&P 500. Dow Transport. Beware here. We had a major, I think it's a potential blow-off top last week on the Dow Transports. I mean, this was insanity, this move. Watch for a break of support here on the Dow Transports. You're seeing a lot of topping action. Volume is still pretty good. MACD histogram losing momentum. Be careful here. S&P 500 daily chart. Hollow-filled candlesticks. More signs of topping action. We discussed this over the weekend. That I was concerned that we were seeing signs of a short-term top here. We're still getting those signs, folks. RSI and the S&P 500 at 77. It's no joke. Volume, very light. The Dow Jones Industrial Average. More signs of topping action. They gapped the Dow Jones up on Friday. You saw a little bit of a fade off the high. Yet again, they bid the Dow up this morning, gapping it up higher. What did they do? They sold into it. Yes, it closed positive on the session, but these gaps up and the close off the highs of the session at the top of a trading range, that's not a good sign, especially when your volume is very low. The trip Qs, daily chart, a down day today. We saw some topping action on Friday. We pulled back today. How was volume? Volume was light. MACD histogram losing momentum. With bond yields reversing today, beware. Beware of a pullback in technology. Small caps. I got stopped out of the small caps back here on this breakout. I may be looking to reshort them. Not for a big move, but just for a scalp. We are very extended here. RSI is at 74.34. That can inch up higher. But the candlesticks are screaming extended. Hollow-filled candlestick today. Volume was very good. But what I want to do is do a deep dive. Let's go to a 15-minute chart. So a little bit of stealth selling into the open after they gapped it up. Good close, though, on a 15-minute time frame. The banks. We are long of the banks. And it's good that bond yields are moving up for us because the banks trade along with bond yields. We're looking for a breakout here out of this bull flag setup. Volume was very light. Technology, daily chart. New all-time highs. Shrugged off the rising yields. RSI now it's 79.14, folks. This is an index. This is bananas. Volume. Very, very light. All-time highs. RSI at 79 on light volume. Consumer discretionaries finally broke today. An amazing run here on consumer discretionaries. It just goes to show you, just when you think an index or stock can't go any higher, it does, but this was unsustainable. Volume, high. We saw institutional distribution. Energy. Energy broke out today. And there you have it. Clean breakout. That was volume. Volume was very light, declined sequentially. So that is not good. Emerging markets pulled itself out of this trading range, and it makes sense because the dollar declined. Emerging markets rallied. This is actually looking pretty good. Emerging markets are looking pretty good. Light volume, though. Gold, daily chart. I mentioned a week or so ago that I thought that we had seen the bottom for gold. That was at around the 1790 mark. It was right around here. Yeah, we pulled back, but ultimately we have broken out. We are now clearly above the 1800 mark, a psychological resistance level. Now support. I think that any pullback needs to get bought. The only thing that could help keep a lid on gold right now is a big rise in interest rates and or a rise in the U.S. dollar. The U.S. dollar, at least on a daily time frame, is not looking good, whereas bond yields had a bullish day today. So any pullback here, we're going to be looking to add more to our gold mining stocks. And with that, members, let's segue on over and into our strategy session where we'll discuss our positions and our watch stocks. And if you're not currently a member, please sign up for the 14-day free trial offer. Use the link below. It'll take you over to the website. Okay, members, let's talk first about the GDXJ, the junior miners. A gap up today, but right up and into resistance. I mentioned earlier about bond yields